So today I decided that I'm going to start posting my weekly market research that I do online. I decided to do it for educational purposes. I've been doing it for a year and a half now, and I was thinking someone could find it helpful and they could probably learn something from it. Like I said, it's for educational purposes. This is not to give anyone financial advice. I'm definitely not a professional. You seek a professional for that. I've been doing it for a year and a half now, so I decided to post it online. I'm going to be strictly using technical analysts, so you should be expecting your basic trend lines, support and resistance lines, and just key price levels. That's all I'm going to be using, so you're not going to really be seeing any indicators of any sort. I love using price action. I found that to be most successful way of going about it for me. So yeah, I'll be taking a top-down approach. So that means that I'll be looking at several different time intervals. I'll be looking at the quarterly chart, the monthly chart, the weekly chart, the daily chart, and last the 60-minute chart. So let me not go on any further, and let's start jumping right into it. The first chart we'll be looking at is the quarterly chart. Let's bring up this trend channel line. Let's remove these for now. I'll explain it later. So the points I decided to use this trend channel line will be right here, and this one right over here. So anything past this bar over here would mean that this trend line would be in effect. So as you see, as the market progresses, it hit this line, came down, hit this top line again, came down again, finally closed above the line. And as you see, as time goes on, markets were first using it as a resistance line and after this bar started to use it as a support line. Again, markets fell below it, market closed above. And that happened several times until this bar occurred right here. So we had a major move down, closed above that top trend channel line, and as you see, the market tried to close above it but could not do it. And you see this whole kind of price action going throughout as time goes on. So what I'm expecting is the market, when it finally does decide to turn back down, it's been a crazy year so far. Prices have been moving up linearly and we usually don't see that, except in 2013 where we see this over here. So interesting times. Markets usually crash down, not up. But like I said, it's interesting times. So when the market decides to consolidate or move down, we're going to start using these lines as support lines. So what I like to do also is this trend channel lines, I like to cut them up in three different pieces. I like to bring up the 25% level, the 50% level, and the 75% level between the two channel lines, the main channel lines. So as you see, after this bar, how the market were reacting to these trend channel lines within the two channel lines, main channel lines. So going forward, we could use those as support lines. And I like to use these also in conjunction with these horizontal main lines. So you see over here, for instance, market was using this area over here as support. It stopped at this horizontal line and this trend channel line, the 75% level. So I like to use it in conjunction like that. Like I said, I really don't use it for entries or exits. This is just to give me a general idea where the market's heading and just to give me a good idea where I will find resistance and where I'll find support. So the next trend channel line we're going to use is at different points. So it's going to be from here to here to here. It's the same concept. Again, this does not invalidate the previous trend channel line. This is just working with the other trend channel line. Let's remove the levels. If I could find them. Right here, right here, right here. And again, it's the same concept again. This I like using these trend channel lines because price mostly works within these levels, so it gives me an area where the market most likely will stay within. So let's bring up those lines again. Sure, not remove them. 25%, 50%, and 75%. So it's just the same concept again. We're using these trend channel lines within the main trend channel lines to find support and resistance levels in conjunction maybe with these horizontal lines. As you see, the market currently right now, this quarter, is fighting to stay above the 75% level. It's showing strength because it's staying above it, which is clearly the line would be over here, so it's showing strength. Let's see, so the next thing I'm going to be looking at is a moving average. So this right here is a 3-bar simple moving average. So the reason why I'm using 3 bars is because every 3 bars represents 1 quarter of a fiscal year. There's 4 quarters in 1 fiscal year. So I really like how these bars are interacting with the 3-bar simple moving average. For example, if we look here, the markets closed above it, closed above it, closed above it, closed above it, and finally closed below the 3 SMA, which stands for simple moving average. Right when it closed below it, the market next quarter shot right above the 3 SMA. So this is a really bullish sign. So we see this pattern occur 2 more times, which is showing bullish strength. It occurs right here again. Look, the bar closed below the 3 SMA, and next quarter closed. Wow, look how close. It closed right above the 3 SMA. And we had markets moving up. And look, it's behaving like support again. Support. Look, this is very bullish. Again, try to close below, close above. Markets try to close below it, close above. And we see this price action occur for several quarters going forward. Then we have it again. Look at this. The market closed below the 3 SMA and then again closed above it the next quarter. So the market's behaving resilient. This is a lot of buying pressure. Obviously, this is very bullish. So the reason why I'm keeping my eye on this is the next time if it occurs, I know a probability that it could possibly the next quarter close above. But like I said, I don't really use it for entries and exits, but just to get a general idea of where the market most likely will head and, you know, probability standards. All right, so let's see what's next. Oh, that was the text that I brought, just a reminder I put up. Every time market closed below 3 SMA, the next quarter market is closed above the 3 SMA. Clear sign of strength. And the next indicator that I like really using is this pivot lines. These are lines that, you know, floor traders use just to get a good sense of where the market is. You know, they don't have computers in front of them, so they really remember these levels, the key levels that I could go over and how they calculate it later in a future video. So as you see, this is a quarterly chart, but these pivots are yearly pivots. So they calculate on a yearly basis. So over here, we clearly have strength. There was resistance at 2407. Markets for this quarter, for at least 2 quarters, closed above them. This is the neutral pivot, so it's not up or down. So we are in the positive territory. We passed resistance 1. So this is pretty bullish. And most likely the next one is at 2576. Let's see if the market has enough strength to reach those levels. As of right now, I don't know if they're going to occur, but with time we'll see. So this is just a general overview of the quarterly market. So next we'll move on to the monthly charts. And also guys, what most likely is going to happen is I might repeat myself for the quarterly and the monthly and the weekly at different intervals, because you have to remember that the markets are fractal. That means that patterns that occur on larger time frames will occur on smaller time frames also. So if there's one pattern on a larger time frame, there could be a similar pattern in a smaller time frame. So if I repeat myself, it's just the way the market works. It's just interesting that way. So the first thing I'm going to do is bring up this trend channel line again. So it's the same level as the first trend channel line that I used for the quarterly. The reason I'm using it again now is you just see it in more detail how the resistance works on these top channel lines and the bottom channel lines. Look how perfectly they work. Let me show you guys where I decided to place the trend channel lines. So it's right here would be the first one, the second one right here, and the third one for the high would be right over here. And just look how the market, so anything past this bar over here would be support and resistance for this trend channel line. So as we go up further in time, you can see how over here we're meeting major resistance to this top trend channel line. Markets are trying to fight above it, can't make it, and close below it. So we never got thoroughly past this top channel line. So going forward, I'm going to like to see how prices interact with that top trend channel line. And also for the bottom, we could see it again. Look how it reacted when it finally hit this level. It acted as support. Markets went past it, but did not close below it. The next month, again, it tried to go below it, but could not close below it. That would have been really bearish, and market was able to close above it. So let's bring up the three different slices within the trend channel line. We're going to bring up the 250, 500, and 75% levels. And it's just amazing how prices react to these levels. It's just showing that these levels are being respected somehow, some way, that institutions are looking at these levels. So it would be a good idea for us as retail traders to pay attention to them also, just to get a good sense of where the market might be heading. And again, currently, the market's trying to fight this 75% level. And right now, we are close to half of the 75% level. It's just interesting how well these trend channel lines work. That's why I use them, but like I said, I don't use them for entries and exits, just get a good sense of where the market is, where most likely support's going to be, and most likely where resistance is going to be. And I always use them in conjunction with key price levels. So also to remember, guys, levels where there's, like, for instance, 200, 225, 250, 275, 300. These levels are so important. These are levels where institutional traders most likely would place trades. They would never place them at, let's say, 2371 or 72. They would be most likely at key levels, let's say at 50, 75, 100. The next one again, 25, 50, 75. So I like to use those levels in conjunction with these trend channel lines to see most likely where the market would find support, or most likely where the markets would find resistance. So let's see what's next here. All right, so again, look at this trend channel line that I created from this point and this point. Like I said, I like using these trend channel lines as support and resistance. And what's interesting is that the same trend channel line that was behaving as a support could turn into resistance, as you see in this example right over here on the monthly chart. From this point and this point, So any bar going forward here, the market would most likely be reacting to these trend channel lines. So the first one we see over here, the market retraced down to the trend channel line and quickly found support here and retraced up. And what's interesting, as we go forward, the market broke below that trend channel line and closed below it, which is very bearish, and started to become like resistance. Over here it was support, and over here it became resistance, which is an interesting dynamic. So going forward, as time progresses and prices move on, I would like to see if prices do start going up, to see if this behaves as support and resistance. It's a good indicator of where the market will most likely travel. All right, so that's done with that. Let's go on to moving average. So over here I have moving averages. These are different time frame moving averages that I put up. So the first one that I decided, this blue line over here, is the 20 SMA. So it's a 20 bar simple moving average. The reason why I use this 20 simple moving average is just generic. Many people like using these lines. I find them to be very helpful. As you see how prices interact with these levels are pretty significant. Then again, I use them as support and resistance levels. As you can see over here, for example, it's behaving as support, breaks the support, then comes over here and becomes resistance. So again, I like using these simple moving averages as support and resistance, and also general trend direction. As you see, I also use a different time frame moving average. I use the 50 also. The 50 is pretty powerful also. I really like using it. So throughout the other intervals, you're going to be seeing the same time that I'll be using on the simple moving averages, the 20 and the 50. 20 will always be blue and 50 will always be red. They will never change on my videos. So I really like how both these moving averages are sloping up. This is very bullish signal over here. So as long as prices stay above both these moving averages, I'm mostly going to be staying bullish. Majority of my positions are going to be bullish, right? We've seen several times market tried to close below the 20 simple bar moving average, but failed to do so. Markets quickly retraced back above it, which is showing signs of strength. I really don't use them, again, I know I'm being repetitive here, as entries and exits to my trades. I just use them as support and resistance levels, and also levels, and just give me, just to give me a general direction of where the market's heading. I find them to be very useful. All right, next one. Let's go over a couple horizontal lines. These two lines on this monthly chart I selected these two levels are very important for me. As you see, the market found major resistance at this level over here. So for whatever reason, the market was finding resistance there, and look at that, it's at a 100 level. I'm not surprised. That's where most markets find resistance and support levels, which is interesting. So this blue line, anything between here, I find to be consolidation. This is areas where the market started to slow down and was indecisive. This is where a lot of trading goes on, and this is where a lot of people are either stuck in the wrong position when the market decides to break out above or below the consolidation area. So I like to use this area as a reminder of where markets most likely could find support with respect to this specific chart over here. So as you see, prices moved up, came back down, found support at this level, 1900, moved up again, found resistance at that 100 level again, came down, found support again at this 100 level, 1900 level, excuse me, and finally broke above it. Look at that. So this is a lot of strength tried to close below it, didn't happen, closed above, and broke out. So as time progresses and when the market decides to turn around, right, and starts to go down, these are going to be significant levels that I'll be looking at right over here eventually as time progresses and prices move forward. All right, so that we're going to go, of course, to my pivot levels. So this is a monthly chart, so these pivot levels are going to be calculated on a weekly basis. As you see, markets first opened above this pivot level, so it's positive. Markets finding major resistance at 24.75 for some reason, and markets have been consolidating ever since those levels. It's going to be interesting time when markets decide to go down, but I'm going to stay bullish as long as it stays above this 2402 level. Also, key level over here. I like to use these pivot lines for support and resistance levels. Like I said, guys, this is being repetitive. I love finding support and resistance levels and just keeping just a mental, a reminder of where these levels are always good, because of times of market crashes and market skyrocketing higher. It's always good to have a good reminder of where these market levels are, because the market does pay attention to them, especially institutional traders. So it's good times to exit and also good times to entry. All right, so that's that for monthly chart. Let's move on to the weekly chart. All right, so the first one, we're going to be definitely start with this trend channel line. Again, the three levels that I'm using is going to be this level here, this connected to this level, and then connected to this level right over here. As you see, the market after this level has been respecting the trend channel line and has been staying within the trend channel lines. And I want to see how they react to different price slices within the trend channel lines. Let's bring it up. Here's the 25%, the 50%, and the 75%. And then again, you guys should not be surprised. The market is respecting these levels. They're behaving as support over here. We're behaving as support over here until it broke. Then again, like I said, it's always good to keep an eye on where these trend channels are and these price slices. They're pretty significant. It'll give you a good idea of where the market's most likely heading, where it's going to find support, where it's going to find resistance, and like that you could be able to place your stop losses or your entries and your profit targets. It's a good idea to always keep these levels in mind and looking at them. Like I said, I do this on a weekly basis. I usually look at all of the charts that I'm be going over today. Sometimes there's no movement in the market, so I'll be honestly reviewing the same things I did the previous week, but that's not a problem for me, because the more that I look at it, the more I remember the price levels, and I find that to be really important. I remember these patterns after a while in my sleep, so I always know when the market's moving. I would not be in front of a computer. I remember how the pattern looks, and I could mentally prepare what to do next. So look at this weekly chart. Look at how the prices reacted to this 25% level. It went below it, but could not close below it. So obviously finding strength tomorrow. Most likely this is going to be opening around here at this level. So let's see how this is going to look a week from now. All right. Trend channel line. Then again, here it is again. Here I have a trend channel line behaving like support, then behaving like resistance. So like I said, I love these trend channel lines. This trend channel line or trend channel lines. They all behave like support and resistance, and also gives you a general sense of where the market is heading. All right, so there's not much explanation here. It's pretty straightforward. Let's open up this horizontal line. So looking at this horizontal line, I find this level to be extremely important over here. We're finding that the market is fighting within this level, so anything above this level is obviously bullish, that the bulls are trying to keep it above this level. So if anything below this level, it's going to be in consolidation. So the market will be in consolidation, so that means that anything between these two lines over here, I wouldn't find the market to be in any kind of direction. You know, with respect to the weekly chart, I'd find them to be in a sideways moving market. If we do go past above this high, which is 24.90, and markets significantly close above it, I could see the markets continuing to go higher. But as of right now, this is still a bullish sign. But if I see the markets close within this area, or even below this low over here, and especially below this low over here, we could see a significant pullback. Well, not a significant pullback, but a market pullback. That's been honestly asking to happen for a while now. Just looking at this monthly chart over here, I'm going to bring up one more time. It's just evident that we've been in a linear move up, and we haven't had a bull flag even for quite a while now, like this one over here. So you see the market went down, broke above it, and moved higher. So we haven't even had we're on this one leg. Well, technically this could have been a bull flag, excuse me, right over here, but moving up linearly. It's just amazing. I don't know when is it going to end, but I think there will be a significant pullback. But let's see, it's just my opinion. The market, I promise you, could have stayed a lot longer irrational than I could stay rational. So I'll keep that in mind. My opinion doesn't matter. Okay, let's go back to this weekly chart. Again, like I said, as long as markets stay, sorry about that. As long as markets stay above this line over here, this breakout right here was significant. As long as we stay, I'm going to be bullish into neutral over here right now currently. But if markets significantly close, let's say above this high over here of 24.90, let's say at 24.15 or 24.20, I could see the market moving higher. Like I said, guys, it's just my opinion. This is not any, financial advice. Horizontal line. All right, go back to our moving averages again. So like I said, the blue is the 20 SMA and the red one is the 50 SMA moving average. Move this over here, and again, guys, look how these prices are respecting the simple moving averages. Over here, behaving like support. Markets came down, acted like resistance, came down, and look at that, blew right past it and never looked back. Market found support over here, which is interesting. Like I said, the 24.90 level, if I see markets go past this, I'm most likely to be on more of a bullish side. Right now I'm on a bullish, to neutral right now. That's how I'm feeling. That's what the market's telling me. But then again, if markets do definitely go past this low of 24.17, which would be significant, which would violate this higher high over here. This lower high. So of this one. So it never came and violated this level. So this is a legit level right over here. So keep my eye on that. And I guess we'll do it for the weekly chart. All right, let's open up this daily chart. All right, the first thing we'll be going over is the trend channel lines. So So what I wrote over here in the text, slopes of the trend lines are becoming more flat in nature. So this is also another thing that I use trend lines for. I not only use them as support, as you see here, and resistance as here, and resistance as here, but also I'd like to look at the slope. Markets honestly cannot support this slope with respect to degrees. It's just too high. This is not sustainable behavior. And the reason why I brought this up is, as you see, the slopes are becoming more flat, which is showing us that the market moves higher are becoming less powerful, which is showing less strength in the bull market. Now, is that going to continue? I don't know. The markets could go into a consolidation phase where the market's not moving up or down. The market is trying to figure out where it wants to go. So it looks like we might be entering a consolidation, consolidation phase of the market. The reason why I like to look at all of these different time intervals, especially the long ones, is I like to be reminded of where I am in the economic cycle. If we're at the low of the cycle, the middle of the cycle, the top of the cycle, or the retracement down from the top of the cycle. So I like to know where I am, and it's a good idea with these trend lines to see the slope of where the market's moving. And I find them to be very helpful also in that, because look how this slope is. Look how this slope is. These slopes are pretty steep. And I like to see how steep the slopes are becoming. Are they becoming more flat? Are they rising? And things of that nature. And as you see, as time progresses, it's becoming more flat. The trend lines are becoming more flat. So the market's starting to slow down. But like I said, this could just be occurring only for several days to several weeks, even possibly months. Like I said, I don't know. It's just to keep an eye on key levels of where the market is. I like to use them as support and resistance lines. Clearly, look how prices are reacting to the levels. Support, resistance. Just amazing. It's always a good idea to keep these things in mind. So let's remove that. Let's go to this trend channel line over here. Look at this. Look at this trend channel line. The three levels that I use is right here to right here to right here, this level. So anything past this bar over here, I'll be paying attention to where prices are in relation to the trend lines. I would not, when the trend lines are this close, I would not usually use price slices, because they would not be very significant. When they're this close, I might only use the 50% level, just to give me an idea of where I am. If I'm closer to the bottom of the trend line or to the upper trend line. And look how it's behaving also as support here and then resistance down this area. And as we see in this area, prices broke below it, closed significantly below it, came up, tested the lower trend channel line, behaved like resistance, and came back down again. So as time progresses, if markets do decide to go past this 2490 level, I could possibly use one of these levels over here as resistance, which eventually could become support. So it's a good idea to keep these levels in your mind and be aware of them. Let's move on to the moving averages. So over here, as you see, both the moving averages are moving sideways. So this represents consolidation. They're not sloping up, nor are they sloping down. They're really moving sideways right now. So this is giving me an indication of the market's little indecisive. If I look at the levels of how the prices are reacting to the moving averages, you see it's really respecting the 50 more than the 20, and that's what will usually happen. Longer time frames usually do get respected more when it comes to prices, which makes sense because there's more action going on at those time levels, and more people are aware of them, and a lot more trades occur at those levels. So it's obviously, you know, what time interval you're using, you have to use the correct simple moving averages. And you have to understand that as you go down in time, these moving averages mean less, especially if they are lower. Like this is a 20-day moving average. It's going to be less powerful than the 50-day moving average. It's just the way it is. But the reason why I brought up these moving averages is just to show that the market's moving in consolidation. The market's not sloping up, nor is it sloping down. This is giving me an indication of most likely what's going to happen in the next couple of days. Let's use these horizontal lines. So I decided to use both these horizontal lines as significant levels. Like I said before, anything above this level over here, I'll be bullish, but still be a little neutral because we are in a little consolidation area over here. We can't find our way above this 2482 level. It's meeting resistance at that level, but as long as we stay above this level over here of 2453, give or take a few points, I'm still going to be bullish. But if prices do enter this level, I'll be completely neutral until until the market decides to break out or above. So we have some more trend lines. Oh, and over here, so finally, as we go into the lower time frames, we could start seeing flags. So over here, we see this bull flag occur. This line was, the two lines I connected was from here to this point, so anything above this, these lines should be respected. And they were over here. We met some resistance. Over here, we met some resistance and some more resistance this way until finally it broke through the trend line and moved up. So what happens is, why I call this a bullish flag is because it's in an uptrend and there's a flag going down this way. So this is a bull flag. Well, I'm not going to go over the formations really, maybe later in the future, but as of right now, I'm just doing what I always do on a weekly basis, is just go over my trades and just keep these patterns in my mind mentally and go over them throughout the week. So we had it occur once over here, and the second time over here, and as you see, the markets broke above it, which the two lines were right here and right here, and the markets were respecting it, and finally it broke above it, and we see some major moves, and look how it acted as support. So the market clearly is not moving up. I could see that it's moving sideways, but these flags over here are a good indication of if there's another breakout. For instance, let's see from here to here, but look at the slope. It's not really that steep, so the flag is not going to be as powerful if it does decide to break above it. But like I said, it's still good enough. If prices decide to move a little sideways, come down and go above this, it's going to be definitely bullish. Let's go here. Let's look at the pivots. So this is pivot. Let's go over. So this is a daily chart. So we're looking at the weekly pivots right over here. So look at that. Prices are hovering right at the neutral pivot level of 2461. That's where the current market is right now. So we are really in indecision mode, especially right now. So tomorrow's Monday, September 11th, and we have to see where the market closes, where the market will be heading. It's going to be interesting. So let's edit that. and go over our last chart, which is the 60-minute chart. Now the 60-minute chart, I'm not going to have much to say about it because it's just a short time frame, but let's see what we get from it. Well, the first thing I would like to go over that I recognized was these symmetrical triangles that I saw. So we had this first symmetrical triangle over here occur. Symmetrical triangles really just show that market is indecisive, that the market tries to go up, the upper trend line becomes resistance, markets crash down, and then the lower trend line becomes support and move up again. So it's hard to tell what direction symmetrical triangles, the direction the market will go, but most likely will follow the original trend. So as you see here, the market is clearly moving up, right? Market's clearly moving up. And symmetrical triangles, usually what happens, they are indecision patterns, which means markets are indecisive. But most likely, if they do break out, they'll break out in the original trend. So as you see over here, the market decided to break out with its original trend, which was bullish. You see, as the market also, as a reminder, as the market keeps moving sideways and hits this apex, the less powerful the move will most likely be. So over here, which is little past halfway mark from this point over here, markets exploded up and never looked back again. So clearly this symmetrical triangle worked out the way that we would usually find it to work out. So we're clearly right now, as I said before, in a indecision mode. So markets are consolidating and we have another symmetrical triangle formed here. So this is our current market. If I see prices break above this level, I could see the market more bullish in the short term. Obviously this is a 60-minute chart, so I can't say it's going to occur for several days, but if it does significantly get past this level, especially this 2480 level, close above it significantly higher with the big bull bar with really no wicks, I could see the markets moving higher. And as you see with these lower time frames is just price levels just to pay attention to. Clearly, as you can see, this level was behaving like resistance. Finally, prices broke above it. This is $23.99. I'm not surprised. 2400 level. I told you guys, always look at these levels. Anything that starts with a 00, 25, 50, 75, 00 again. So for this level, 2400, look at that. 2400 level was behaving like a resistance level and finally broke above, and I could see it in the future being a support level since prices are above it, significantly above it. So that's it, guys. This is my general market overview that I do every week, once a week, and hopefully you guys learn something from it, or you guys find it to be useful. Like I said, this is only for educational purposes. If you guys have any questions, or if I said something wrong you guys would like to correct, please let me know. I'm not a professional trader. I've been following the markets for about 10 years now, close to 11, and I've been trading about full-time for about a year and a half, a little more than that, and I love trading. And hopefully what I'm going to be doing is I'll be posting videos of my trades. Well, not all my trades, my swing trades I will most likely do, and they're going to be only vertical credit spreads. So I'll be posting the strikes that I use on vertical credit spreads, and I'll tell you the strikes I get in and the expiration month. So if you guys would like to follow along, see how those trades work out, you just follow my videos. Okay guys, if you guys have any questions or comments, please leave them, and talk to you guys later. Bye bye.